Hi, my name is George Dagnino. I'm the editor of the Peter Dac portfolio. What this video is about is showing you a trading system, very simple, which works in bull and bear markets. Now, why did I start this last year? Because I saw the market really volatile. I saw many political uncertainties and geopolitical uncertainties, wars in every continent. So I said, the market, you cannot, George, you cannot think long term. You need to think shorter term. So I have developed a system that seems to be working pretty well for me. So what I want to share some basic concept, as I said, is very simple. Here we go. Okay, the system, the steps in this trading is in four, five, if you wish, steps. One is, first of all, is the seasonality. There are some stocks that are seasonally, highly seasonally. I will show you. And so it's good to buy stocks that you know this is a positive seasonal period. Like July, they're going to go up, most likely to go up. If seasonality wise, they have 50-50 chances, then why should you waste your time with that kind of stocks? Find new ones. Then the second idea is relative strength. It's not the RSI, what everybody thinks. Is the relative strength is the price divided the S&P 500. In other words, you want to invest in stocks that have a relative strength rising. That is a stock that has price and relative strength rising. So you know you're going to outperform the market. Has several advantages because the strongest stock also, by the way, when you will be wrong, because you will be wrong, when they decline less than the market. That's the advantage of these stocks. The technique that is most used for shorter term trading is trend lines. And I show you how to, the trend lines that are the important one. Volume, very important. You have strong volume at the tops and you have strong volume at the bottoms. So that's a very important indicator of when to sell and when to buy, when it's a company with the other three indicators. And then risk management. Part of the process I would show you is the trend line. As once you buy, you have to know when to sell. Because let's say you have, last year I had 72, 75% probability of winning. So 7 trades out of 3. But the 3 that I lose, cannot lose too much money because otherwise I offset the gain that I have on the other 7. In my case, it's around 2%. I cannot lose more than 2%. So this is risk management, and I will show you how this applies to the process. This is a seasonality chart of URI, United Rentals. Now, as you can see, in April, only 20% of the time rises. In September, only 25% of the time it rises. But look at this one in July, 100% over the last 5 years, 100% of the time URI went up in price. So what are you going to do? Well, you want to buy URI sometimes in April or May, possibly May, because so you have this the seasonal advantage. Or you could buy it in June and you have the seasonal advantage for the strength that is going to appear in July. I divide the charts in 3 panels. One is the price, the green line. The mid panel is the relative strength. What that means is the ratio computed by the ratio of the price divided by the S&P 500. And the lower panel is the trading volume. The important line is this one, the relative strength. Relative strength, I have been in the business and I saw what analysts do. They have special presentations by chairmen, by the president of production and manufacturing, engineering, research. They have analysts have interviews with the whole top management. They have a vision of what the company is going to do for the next 5 to 10 years. They know things that you and I will never know. However, they represent big money. If they have a good idea, you will start seeing the price of the company rising faster than the market. because big money knows. So this is what the relative strength shows. That when it rises, it means that big money knows that that company will do well. So they're putting money. And this is where you want to put your money, the way the big money is putting their money. Now, this is when I look at stocks, I always look, the first thing is the relative strength line rising or not? So in this case, it's rising. Oh, by the way, this is not buy or sell recommendations. The purpose of this video is just to show you a technique. So you do your homework. So the use of in trading is very important to the trend line. And I have several trend lines which are very important. This one, for instance, this one comes all the way back and comes from a peak. It hits this peak, it hits this peak, it hits this peak, and the price always hit and could not make it. That means that a lot of people are selling. But the relative strength line is rising, so that tells you that there is buying. This trend line here tells you that the trend has moved up, because once a trend line is violated on the upside, it means that the trend has changed. So how is this lower trend line drawn? Well, 1 point and 1 point is a trend line. You can draw a trend line. Then the program gives you a parallel trend line, so you draw this line. And look what happens. The price stops here and stops here. So there is a channel that eventually established on the downside and on the upside. This is also very important. Very, very important. So now let's look at a volume. Look at what happens to volume. Volume here increased, was very low and increased here. Okay, and look what happens. There was this stock started trading in a range, but look within the relative strength, it started declining. So rising volume, relative strength declining, it means that the big money doesn't see an opportunity in your eye in the next several months. So it's time to get out. Now here, this line that I drew is a item that I'm looking very carefully, because I said if that resistance, the price moves above that resistance, that means that finally the big money has decided that the price has to go much higher. So I go here and I see relative strength rising. Look at volume. Volume rose very sharply, well above average around here. So you have the possibility, the probability that the price is going to go up above the resistance. You know that is a seasonal. You have above the relative strength, rising volume and rising relative strength. This is a good setup. Now, risk management. Now you see the price going above the resistance. Now get into risk management. You're making money. So how you protect your gain? Well, the risk management comes if it goes below this trend line, then it's time that the breakup is a false breakup. So you have to sell. That's very important. You cannot let your losses run. In my case, with my kind of trading, is around 2%, 3% max, 2% probably. So this is one example. Let's see another example. Now, let's look at Cintas now. Again, first thing is seasonality. Is this a good seasonal period to invest in Cintas? Well, the seasonality says yes, because in May, over the last 5 years, there's 100% chance it rose 100% of the times. In July, it rose 100% of the times. So the period May, June, July is a good period for this stock. So we are in a good period, and we should look more into it. Okay, this is the price of Synthase, the green line. This is the relative strength in the mid panel. And this is volume, the lower panel. Notice how Synthase increased in price, but look at the relative strength. So yes, it satisfied the condition of rising prices and seasonality, but the relative strength is down. So this is underperforming the market. You do not want to be there. What has to be noticed that there is heavy volume here in January 2025 and again in April 2025. This is a sign of a top. The interesting thing that there is a lot of volume here, so probably this could be a point where the price is going to strengthen. However, keep in mind that this is going to be resistance at two pivot points, major tops. So when this price is going to rise here, it's not going to go through this level. It's going to churn around it. And if you have declining relative strength, it's not high on my list of recommendations, let's say. It wouldn't be. So why do you want to chase Synthase? There are so many stocks that to choose from. So this has some conditions, but has not others. Besides, it also broke this trend line. So the trend is that the price of the down, the relative strength is down. When you're uncertain, you don't have to buy it. As I said, there are so many stocks around. There are 2,000 of them. There is someone that you will like. Okay, let's look at another stock, EMR, Emerson Electric. Seasonality, great. In the last 5 years, in July, 100% of the times. So May, June is an appropriate time to buy this stock. The other times of the year, they're not that exciting. So this is a sweet spot for EMR. Okay, this is EMR. EMR, this is the price, the top panel. This is the relative strength, declining faster than the market. Now here is rising more than the market, so it's stronger than the market. The appreciation of EMR is greater than the market. And this is the trading volume. So you don't want to buy EMR when the price either declines, obviously, and the relative strength declines. When it comes to this point here, in April, what you see is, of course, a lot of volume. So that's good. And what you see, the relative strength now is going up. That is very good. So now you have three things in your favor in April. You have heavy volume, telling you that this is a lot of people are buying. The relative strength is rising, so that people who know, they know that EMR is their favorite companies in terms of performance. So this, and the price goes up. This is an excellent setup. Now, let's say now we are here. What do you do with EMR? Should you buy or should you sell it? Or should you just do nothing? Well, this is a previous high. So this is a major resistance level. And as you can see from this point, and this point, you can draw a trend line. And EMR stays above the trend line. As you can see here, the price closes almost to the highs there. So it's now kissing the resistance line. Should you buy? I would not recommend it, even if the relative strength rises. However, this heavier volume here suggests that at this point there is some buying, and people believe that it's going to go above 131. So you have two choices. Wait. If this goes down below the trend line, all the bets are off. Forget it. But if this breaks, it goes above the trend line, relative strength rising, then once it goes above the resistance, this resistance level, then yes, you start accumulating EMR keeping into account that the conditions for buying opportunities have to be in place. The risk management technique is if this goes up and you are wrong, you start buying, and the price goes below, all the bets are off. You've been wrong, that's okay. Let's go to another stock and you repeat the same type of analysis. So you have to keep in mind that the conditions that you're buying are very strict. But once those conditions are violated, you have to sell. Maybe you can wait 1, 2%, but then you have to sell because you've been wrong. This is a useful technique that I showed you. It works very well when you are not sure about the markets and you want to not think long term, but when the markets are volatile, there are too many things happening in the world to set up a long term strategy, and then you want to shorten your horizon. As I said, looking at a seasonality is the first step. Then you look at the price has to go up and has to be above a trend line. The third step, you want to have the relative strength rising and then possibly on heavier volume. These are the conditions. The risk management is one of the conditions that you used to buy is violated. You have to sell. You have you have been wrong, and that's okay. You cannot be 100% right. But this technique is good for bull market, especially. Obviously, everything goes up and you go up faster than the market. But also, you don't have to review if it is a bull market or bear market, because if you don't find the stocks that you like and you see most prices down, the market is telling you don't buy because you are in a bear market. So, but even if you find some stocks, chances are you're going to make money. But the odds, however, what I found, the odds of being successful, of course, decreases from, let's say, the 70, 75% in a rising market to probably 60% in a down market. Thank you very much for following this video. I hope you found it useful. And again, it's another tool in the toolbox of investing. Again, thank you very much. If you want to know more detail, of course, you know where to go, www.patreon.com/Peter Dack. There you will find also not only this kind of videos, but also more business cycle oriented, how to use the business cycle to devise and implement an investment strategy more long term. Again, thank you very much. I appreciate you following me, and I hope to see you really, really soon. So long.